Alright, welcome back traders. Jeff with OptionBoxer.com. This will be the final video in our How to Trade Options video series. And let's get into it because we're going to get into the last couple of phases here. We're going to talk about entering positions, exiting positions, or more specifically this hypothetical trade we've set up throughout the last 5 videos, I think. And so we'll look at entering and exiting that trade, or possibly some other trades, and then go from there. So the disclaimer is this example was selected for the demonstration provided below. These trade setups happen all the time and on every chart, but your results can and will vary. Please always do your own due diligence prior to making investment decisions, and/or consult a registered financial advisor. This page is not a recommendation for you to buy or sell any securities or attempt the information provided. Basically, you are on your own. Any losses you have will be yours. Any gains you have will also be yours. So looking here at order entry, now like I've mentioned throughout the course of these last few videos, I use Thinkorswim, but so whatever platform you're using, there will be a method to enter the trade, and typically it's as simple as clicking a button and then confirming what it is you want to send or what it is you want to order. So pay attention and just don't miss out on any of the details, and you're going to be fine. So for this hypothetical trade, we've got a contract month of March 2016, and it's the 47 strike call option. It's just a long call position, so that's our strategy. You know, as you get more experience with options, you'll learn about the what seems like an unlimited number of option strategies that are out there. And the premium we're going to pay is 97 cents, so that is a debit. And our outlook is short term, 1 to 10 days is kind of part of our trading plan, so to speak. We're hoping to collect our profits in the next 10 or less days, and then beyond with another trade. Days to expiration is 31. Profit target is unset, and like I mentioned in that video, probably best practice to set an actual profit target. However, for this example, I did not. So basically what we're going to do is you can kind of handle this a couple different ways. So this is the trade that I'm setting up here, and we'll come back to this, but in Thinkorswim you can do one of two things. You can either right click on the bid or the ask for the contract you want to sell. You can come up here to buy single, which is what I highlighted here, or you can simply just come to the, in this example, 133 strike call, and just click there, and it'll bring it up into your order entry window here. And basically you'll make sure everything's right. This right here is good till canceled, or a day order. If you, let's say you were going to set this at a price that was well below the current market price, because you thought that you thought GLD would go lower before it went higher, so you wanted to make sure you didn't miss out on the opportunity. You wanted to set this at 240 instead of the market price of 264. You could just simply do a good till cancel order, and then you won't be filled unless this 240 mark is reached, in which case as soon as it is, it will trigger and the order will be filled. But that's two ways to go about on Thinkorswim entering it. You can either, again, right mouse click it, buy, or if you're selling, sell. Of course, you can see a number of different option strategies that there are. Of course, right here we're only talking about buying or selling a single call option, but as you become more experienced, you'll be able to look at those different strategies and see if they make sense for your investing style or portfolio. At this point, you have to determine what type of order you want to conduct. A limit, market stop limit, we've talked about all those already. It seems overwhelming, but it's all fairly simple. Time and force, day, or good till canceled, which is what we just talked about. I typically leave the exchange box alone unless you have an exchange that you know that I'm not sure why you would ever want to change this box here. So if I bought that, this right here, you can select the different exchanges. I've never in my experience trading changed that box, but there might be a reason at some point that you would want to, and you could certainly feel free to do that. So in this example, you can see I bought the call option that we've been talking about, And so now we'll go ahead and look over here at exiting the trade. And so there are three ways to exit an options trade. You can either close the position in the options market, it can expire worthless, or you can exercise or assign that contract. And we've talked about all those throughout the course of this video series. The most common form of exit is to close the position in the options market and for this example, I'll be doing just that. I look to capture a profit by selling the option I purchased to someone else. So let's take a look at my trade for Delta a couple of days later. So just a few days later, we did get the move that I wanted, and you can see that I'm now looking at a profit of $71.50 on one call contract. So let's kind of take a look here. And so you can see in just 2 days, I made $71.50. At this point, my assumption on direction was correct, and I collected some nice profits for my analysis. So what should you do next? Well, to answer this, you need to reevaluate Delta. So for this particular trade, we're going to reevaluate the chart, take a look at the VIX chart and the S&P 500, just like we did on the trade identification page. And for your sanity and my own, I added this little note. I won't show all three, but we'll just take a look at Delta. So just know that if you were trading this way, if this was something you thought would fit your trading style, you would want to go back and you would want to analyze this position as if you were opening the trade anew, or you just want to analyze it completely. So make sure, if in your trading plan your analysis has steps 1, 2, 3, 4, 5, make sure you go through steps 1, 2, 3, 4, 5. And so in this situation, you can see I've identified a resistance level here as price reached up to it, and I've also identified a second resistance level here. And I could have actually drawn this line all the way across, because you can see on these days here, that line would have been honored as well as a resistance level. So it looks like this first resistance level has touched it once, twice, 3 times, 4 times, 5 times, 6 times it honored that level. 7 times it honored it as a support level. And then looking from this way, it looks like it was a resistance level once, twice, and 3 times in the past. So, just looking at what we see here, it was a better support level than it was a resistance level. So if that, that's kind of more of an art than a science, but you could certainly make an argument that it held as support. So you could make the argument that this would probably break through, because it didn't really, sellers didn't come in and push it lower at this point. Once it went below it, buyers actually came in and helped buoy it in this area, at least temporarily. Or not temporarily meaning that trading day, but regardless, that's kind of an identified resistance level. And then that one is the second one. From the chart, it appears we're right in line with that resistance, so you can kind of barely see that green tick there that's hiding behind that red bar or that red line, and that's where price is currently at, which is 46.41. And let's see, so it could either close the trade here or monitor the position to see what price does near that first resistance line. So Bollinger %B is pushing closer to overbought territory and no signal from the PPS indicator, which we talked about earlier. For now, I'll wait and watch what the price does. So let's fast forward through the weekend, and on Monday, let's take a look. And as you can see here, the price did in fact jump up above, and it did actually reach the second resistance level. So the stock didn't do much on the 18th. It stayed near the open all day. So closing before the bell would have been a logical decision. However, I chose to wait and see what happened the next day, and was rewarded as more bulls entered the action. Once the first resistance line was broken, I felt strongly we would reach the second, and indeed we did, and of course earned a little more profit for our time, assuming that risk. So at this point, I can't see any reason to keep the position open. It's already at the second resistance level that we've identified. You could make an argument that if it broke through here, it may see some highs here at 52 again, but we've already taken a nice profit, and there's no reason to get greedy. So let's see, no, I can't quit my job, of course, with that money, but you could see $117 if I had 100 contracts open. If I had the capital that would allow me to trade 100 contracts, you can see that would be a nice profit. So all that needs to be done now is to close the order. Well, to close an order, it's simply the same in reverse. So if I bought this to open, now Thinkorswim makes it a little easier. You can come over here to your monitor tab, and I won't click the monitor tab and highlight it at this point because I've got information there that I think I could get in trouble for sharing. Um, but you'll go to this monitor tab and you'll simply right click on the position, and it'll ask you if you want to close the position. Alternatively, you could come back to this trade tab, and if you bought this and this position was in your account, you could simply come back to it and sell it. So if you bought it, you're going to want to sell it to close it. And of course, the hope is that when you sell it, you're going to sell it for a higher price than you paid for it and make some money. And you can see here, this is actually an image of the monitor tab, what you would kind of look at. So you'll right click on that delta position and create closing order, and then sell one delta contract. And then of course it'll open up this screen, which we just looked at, and you're just simply selling to close this position, and you'll confirm and send it, and then that's it. So on the next page we'll take a look at a couple of my final thoughts, and then that'll be the end of this introductory how to trade options video course. So first, if you made it all the way through, thank you. I hope that everyone was able to value in some way from the information. Of course, feel free to always reach me at optionboxer.com if you have suggestions, or if you have thoughts that you think I missed something or think something should be added. You know, I'm only human. I do miss things that would probably be of value to others. Let's see. So, you know, throughout this site, you'll find that I typically only make a few types of options trades, and it isn't normally buying long calls and puts, which is the trade we demonstrated here. That strategy is very risky, and if you turn out to be incorrect on the market direction, you would pay dearly for it. There are several factors that must be considered before employing a long call or a long put, and we won't discuss all those here. Just know that you're on your way. So you'll notice I trade primarily vertical spreads, iron condors, and calendar spreads. They suit me because they limit my losses. I can capitalize on any market direction, and they help me earn a consistent income. Should you choose to follow along with my blog, you'll learn my favorite strategies, sound practices, and things to avoid along the way. So I've tried my absolute best to provide as much information as possible while still maintaining a simple level. Please don't expect this to have been a comprehensive course. It isn't and was not intended to be. So the course was meant to provide basic information to kind of develop a foundation for trading, demonstrate, of course, an options trade, provide some steps for finding and entering the trade, and then highlight some of the nuances of options trading and the Thinkorswim platform for those things I think I've done. And if you feel I've left something out, again, please reach me. Thank you for sticking with it and make it to this point. I truly do hope that you are successful in all your trading endeavors, and appreciate you watching this course. God bless you. Bye-bye.